All right, the 15th entry is received interest from bank 2500. Fine. See, when you receive interest, it is received in the bank account. So bank the balance is increasing and bank is an asset. Increase in asset is debited. Okay. And what is the name of revenue account? Interest is the name of revenue account. Okay. So interest is treated as revenue here and it is increasing. Interest is increasing. Therefore, it is credited. The amount is 2500. 2500. The narration is simple. Received interest. Received interest. All right. The 16th one. The 16th one is paid insurance premium rupees 6000. Okay. Paid insurance premium rupees 6000. So insurance premium is an expense. Insurance premium is an expense. So insurance premium account debited to cash account. Obviously, it is paid in cash. The amount is rupees 6000. Insurance premium is an expense, therefore debited. Increase in expense is debited, and cash is credited because we are paying cash for it, and cash is decreasing. Okay, therefore it is credited. So paid insurance premium. Paid insurance premium. Now the 17th entry is purchased stationery. Okay. Now stationery is also an expense. Okay. Stationery is also an expense, or you can see it both way. Stationery you can see as an asset also and as an expense also. All right. Either way, you will end up with doing the correct entry. So stationery account debited to cash account. The amount is 1200. Okay. And we already know the logic behind this entry. So a stationery account to cash account will be the entry, and what should be the narration? The narration is purchased stationery. Purchased stationery. All right. Moving ahead. 18th transaction is advertisement expenses paid. Advertisement is an expense. Advertisement is an expense, therefore debited. Advertisement account debit to cash account. Advertisement account debit to cash account. The narration should be paid for advertisement. Paid for advertisement. Amount is rupees 9000. 19th transaction is cash sales deposited directly into bank. Okay. Cash sales deposited directly into bank. All right. So 19th entry, if you are directly depositing cash into bank, the first entry should be, since we are receiving cash for sales. Okay. So the entry should ideally be cash account debited to sales account. Why? Cash is an asset. Cash is an asset, and also it is mentioned that sales cash sales deposited directly into bank. Cash is an asset. Asset is increasing. we are receiving cash because we have sold the finished goods. Okay. So asset is increasing in the form of cash, therefore debited. Sales is the revenue, as we have discussed earlier, therefore it is credited. Now, since this cash is deposited into bank, so there will be one more entry for that. Okay, there will be one more entry for that to complete this transaction. First of all, let me write down the amount. The amount is rupees 25,000. Now, this cash is deposited into bank. Okay, this cash is deposited into bank. Therefore, another entry will be, this is the first part, and the second part will be bank account debit to cash account for depositing the cash into bank. This entry has been done for cash sales, and this entry is done for depositing the cash into bank. Now, bank, if you deposit the cash into bank, bank account is increasing and cash account is decreasing, or you can say cash is decreasing. The amount will be same, 25,000. Okay. Now, the last entry. Goods distributed as free samples. Now, a very important entry. Okay. The last but not the least. Very important entry. See, when goods are distributed as free samples, it is done to promote the business. Okay. So here we will write free samples. It is a part of advertising basically. Okay. Free samples for advertising, or you can just write free samples account debited to purchases account. Debited to purchases account. Now, why we are using purchases here? See, first of all, goods, we write goods as purchases here. Okay. And free samples as an expense. Free samples as an expense, advertising expense. So advertising expense is increasing, therefore debited. Purchases, on the other hand, is called goods. Okay. Because we are using the word purchases. Okay. We are using the goods purchases for goods. So when you are distributing goods as free samples, what is happening here? We are reducing the goods here. Okay. Therefore, it is credited. So ultimately, goods are decreasing, but goods are known as purchases. Goods are known as purchases. Therefore, purchase account is credited here. All right. Purchase account is credited here. The amount is rupees 4,000. All right. Entry narration will be goods distributed as free samples. Distributed as free samples. Fine.